Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our analysis. Don't forget to subscribe to the YouTube channel in order to get notifications once we post new content. In this video, I'm going to cover dollar yen, the S&P, the bond, and the US dollar. Let's start with the dollar yen. On the dollar yen, last week, after the employment data, dollar yen started to reverse and it failed to continue higher. And today, we are having a discounted dollar yen. So look, I have a question for you here. Should we buy here at the breakout of the resistance? Or should we sell here at the breakout support? Do you consider that's a good technique to trade the breakouts? Well, one of the basics of trading is to sell high, buy low. So according to that basic rule, we shouldn't be selling here or buying here. Yeah, sometimes market could break out and accelerate, but that's not our job. Our job is to find good prices. Our job is to buy when the price is cheap. Is to buy when the price is cheap. Is to sell when the price is expensive, if we are looking for a sell trade, of course. So one thing is the bias, one thing is the direction of the market, and a different thing is when to trigger a trade. And that's where the Elliott wave theory comes in order to help us to understand where we are and where are we likely to go in the future. Well, on the dollar yen, my bias, my Elliott wave analysis, is to have another leg up this week on the dollar yen, back to the highs. Because I have the wave count, is that enough to go and trigger a trade just because the wave count is there? No. I need something else. I need validation. And the validation happened in this particular case on the hourly chart once I have a candle returning back to this area and closing above wave A. So when I have a green candle closing above this area, that's where I want to buy it. And I'm going to leave the stop loss below the low, right? And the first target here. And that's it, right? That's the plan. So I need the wave count plus seeing the buyers taking control of the market. On the other hand, if the dollar yen goes lower from here without showing validation, well, we will go back here and I will continue finding a validation to go long, maybe here. But I'm not going to sell here. The sell was here. And if I miss it, I'm not going to sell here because that's too expensive for the short. So remember, always we need to buy when the market is relative low and sell when the market is relative high with a wave count because it helps to understand the cycles, and a validation point that is the entry, the validation for the end of the wave. That's a formula that once you are able to master, you're gonna start making good profits. Trust me, it's a great way to trade, and around this foundation you can add indicators if you like, or price action, whatever you like, you can add once you understand when the market is cheap and when it's expensive to add to your validations. The S&P it has been going higher in a really complex market. Look, if we zoom out, let's go to the 4-hour chart. Market has been going up, but in a really complex way. So it seems that the S&P wants to break out this week the previous record high, and we are really close. So I believe this week we're going to break out this area, and we need to see if the price starts accelerating, it will be fantastic. I have been accumulating buy positions on SPY for a while, and that will be fantastic. Or another option is that the price rejects, like fails to accept a new value, and we could be in a pattern like this one, a big consolidation that could be for a while. So this week is gonna be a key week, because if we have some X news that helps the price to go higher and show us the wave 3, that would be fantastic. If not, we are at the market highs, and the market could very easily validate a bearish trade, and the target would be the low. So if we have the price going outside and accelerating, great. But if we have the price outside and re-entering the previous wave 1, that's a big issue, and we are likely to go lower, maybe back to the 4050 area or somewhere at the middle, a big retrace around this area. Let's have a look at the bond market. The bond market was really aggressive after the data, after the employment data last Friday. We have a huge move up, but it remains in the trading range that we have been seeing for the last month. So that's fine. No big deal for the market. Here I'm expecting an ABC, another 5-wave sequence with a lower slope than this huge move, to find some sort of double top formation, and that will be the leg down. So that will be great for the dollar. And the dollar right now is bearish. It seems that we are in an ending diagonal wave. You can see that I have here 1, I have 2, I have 3, I have 4 moving inside the wave 1. Here's the invalidation for the diagonal, the end of wave 2. And if I have a reversal above wave A, that's where the dollar yen should be triggered as well to buy dollars. I like the dollar yen this week because it's giving a good discount, and the target is going to be around this area, the previous high. So one more leg up on the dollar, if only if we have a validation reversal confirmation here. That's the only way. Alright traders, I want to invite you to sign up right now to the Elliott Wave Street membership, which is fantastic. We have on the daily membership updated videos with charts, also with trade plans, a lot of stuff in the membership, plus the new Members Academy, where you will learn the basics of Elliott Wave, and I'm adding new lessons every week. So you can sign up right now to take your trial. You will get immediate access to this whole world of analysis, which is fantastic. Please have a great week. I'll see you inside the membership. Take care. Bye-bye.